please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turned out to be quite a sluggish start to the week, but no surprises there considering what we've seen with oil prices over the weekend, spiking to over $79 per barrel, but coming off that level. And separately, we do have Asia, most of Asia, which is quite sluggish this morning, so probably taking cues from there. So sub 10,700 for the Nifty, lot of stocks in focus, which we'll be discussing over the course of the next 1 hour. Hi, Prashant.
Ekta, hi. I mean, I just want to make a few points, and all of this, mostly all of it is global. You mentioned Asia. I mean, actually, the market which is the pain point is China. I mean, if you look at the Chinese indices, we've got, I think, a 2.5% cut on the China 50 index. The Asia market there. So that is the Shanghai, which is down 1.5. The other one is down 2.5 the last I checked. So, and of course, I mean, the other big market, which is Japan, is also down. So the two big markets in Asia are down quite a bit. So a few things now. The Chinese PMI numbers, which came through over the weekend, they're still in the 50+ zone, which means it's in the expansionary zone, but it is down. I mean, compared to what we saw the month before, it's coming at 51.5 compared to 51.9. And this is weak data out of China at a time when you got so much attention on what's going to happen between US and China, right? I mean, you don't want trouble in China in terms of slower growth at a time when things on trade are looking so uncertain. Sticking with China, US tariffs on $34 billion in Chinese imports are basically going to effect this Friday. Retaliatory tariffs from China on US products worth the same amount also, I mean, begin at the same time. Will we see something, some negotiations, some talks, I mean, statements coming through in a bid to avoid these tariffs which go into effect later this week? We don't know. But as of now, I mean, you know, it's out of the $50 billion, $34 billion in tariffs on Chinese products into the US go into effect on Friday. Trump, I mean, in an interview with one of the US networks there, I mean, he spoke extensively about some of the important things like oil, etc., etc. But on trade, I mean, he indicated that he had absolutely no plans to sort of back off as far as China is concerned. So, I mean, I think people did sit up and take notice and say, well, you know, this is essentially the $34 billion tariffs will actually be implemented. The bigger question, I think, and I highlighted this on Friday as well, is that I think now markets from sort of, you know, the consensus expectation being, well, there will be no trade war, that mood has now become, well, there may be a limited kind of a trade war. The big question, though, is, are markets really prepared for even a limited trade war? The question, I mean, remains unanswered. But look at market reaction, and you'd get a sense that maybe even a limited trade war may not be palpable to stock markets. I mean, actually risk assets around the world. You mentioned oil, but the fact is, you know, Trump tweeted that he's spoken with Saudi Arabia, and Saudi Arabia, according to him, has agreed for a 2 million barrel increase as far as oil production is concerned. There is only a 1.5% cut as far as oil is concerned from the elevated levels after the rally on Friday. So, you know, it's not a big impact. Well, it's having an impact, but it's not a big impact. And that remains the big worry for countries like India, which are large importers. So just wanted to sort of set the global context in, because a lot of what we are seeing out there is indeed global in nature. Ekta.
Okay, yes, absolutely. It is global in nature. But for the Nifty, 10,645, and we have an advanced decline ratio, which is a bit on the sluggish side. We have the M&M tractor sales, which are out. The CV sales or the other auto sales were out already. But the total tractor sales have spiked up around 22% on a year-on-year basis to over 40,500 units for the month of June. So that's what they've recorded. And we'll get Sonia in to talk about what exactly the expectations probably were and how exactly they've done. So there's been a 24% growth in terms of the domestic growth for the month. And remember, that's dominant business for them. So that's exactly what they've reported this time round. Domestic sales stood at around 39,277 units, and inclusive of exports, the total units were around 40,529. So 24% growth in India, and inclusive of exports, which were down 13%, it was around a 22% growth. growth. So we'll get you more details from Sonia once she joins in. But as of now, we have Sudarshan Sukhani joining in to talk about the technicals of the market. Sudarshan, hi, morning, over to you. What is the kind of key level that you're watching for the Nifty, and what would your strategy be at the start of the week as well?
Yeah, good morning again. See, for the Nifty, we are looking at a lower level, and prices should break 10,550 over the month of July. So the view is that we take a positional trade in put options, which is something we have explained, I have explained since last week, and wait patiently for the markets to oblige us. I think that we will see lower levels. For today, only for today, we have an intraday dip. It is possible that a bounce may come about. So at current levels, the Nifty is an intraday buying opportunity. That's all. If it doesn't work, get out with a 20-point stop loss. But the bigger trade is on the downside, and keep those positions in puts, essentially bearish positions.
Okay. What would your stocks be then, Sudarshan?
Well, mildly on the bearish side, given the market conditions today. Vedant is a short. Vedant and Hindalco have both been breaking support levels. Metals essentially is in a mini bear market of its own. So Vedant is the short sell for today. So is LIC Housing. I have been downbeat on housing finance companies for some time, and that theme continues on the downside. LIC Housing is a short sell. Luckily, IT is holding the sort of battle as such. So TCS is a buy, even Infosys is a buy, but for now, for this show and for the rest of the day, TCS probably is a mildly better option. So TCS is a buy, and two themes are short sells: housing finance and metals.
All right, we got some questions now, Sudarshan, coming your way. So let's get to those. Selva Iyer holds 1,000 shares of Bharat Forge. Cost is 550 rupees a share. Basically wants to know whether you should hold or sell. Your advice.
I think you should hold. If he's a long-term investor, at current levels, he's bought at a very good price. He just holds on. The Bharat Forge should outperform in the next few years. And if he's looking for a short-term move also, then a move towards 650 is possible. So in either case, whether he's short-term or long-term, he should hold.
Okay, so there was an upgrade which came in from a brokerage today also for Bharat Forge. But there's one more query for you, Sudarshan. Sandeep Jain wants to invest in CEAT and Mahanagar Gas and Ujjivan. When is the right time to invest in these stocks specifically, respectively?
Okay, here's a long list. CEAT, there is no right time because CEAT is in a bear market. We don't suggest buying bear market stocks. Just avoid them. You don't know how much lower they will go. So I should not even recommend a support level. Just let it go down. When it stops, when it builds a base, that's the time to think about it. That's not even begun. So CEAT is a complete avoid. The same story comes from Mahanagar Gas. It's in a bear market. It's not stopped. It's not building a base. There are no levels to suggest. Luckily, Ujjivan, his third stock, is a better option. It's in a trading range, and a dip towards the lower end of the range is a buying opportunity. Somewhere around 330, 340 is a place where he could consider buying Ujjivan.
Okay, Sudarshan, we speak again. Thanks indeed for your time. Appreciate you joining in with those trades. Rahul Shah from Motilal is with us as well with some futures and options trades. He's got, I think, 2 buys and a sell. Rahul, morning.
Morning. I think where the markets have been seen, I think it has been more stock specific rather than on the indices levels. So I feel that we saw a good rally in pharma bouncing back smartly in last few sessions, and now I think been just cooling off from the higher levels also. So in that space, I think Lupin is a short sell. What I feel is, so I think one can go short on Lupin with a stop loss of 920 and target of 860. Second, I think Tata Steel, I think been taking a support at the lower levels. I think 545 and 550 levels. I think couple of times the stock has taken a support and moved up, bounced back very well from there. So though entire sector seems to be a negative, but I think Tata Steel has been bouncing back from those levels. So I think some money to be made from the lower levels with risk to reward very limited in that stock. So I would go long on Tata Steel with a stop loss of 552 and target of 585. Thirdly, we saw, I think in NBFC a mixed trend, a lot of stocks in housing finance going negative and few NBFC are outperforming from the lower levels. We saw something like this in Shriram Transport on Friday. So I think in that space, I think Capital First, I think the stock is near to its 52-week low, I think, but I think 5 and 4, 5 and 5 is a good support level for a stock. So it should hold for some time and we can see some bounce back also in this stock. So I would play for a bounce back in Capital First where the risk to reward is quite low in it. So I would buy with a stop loss of 508 and target of 540.
Okay. All right, Rahul, we're going to let you go on that note. Thanks very much for joining in and giving us all of those strategies. Just want to point out that from the mid-cap index, it's down 1%, but the likes of Manpasand, which are up in upper circuit today, so watch out for that. That stock is up around 5-odd%. HEG is now close to a little above 3,400 rupees. So that stock is managing to gain today as well, up around 3-odd%. HCC is off the day's high, but nonetheless, that stock, which is around 12.5 rupees per share, is showing an uptick of around 3-odd% at this point. Just watch out for a couple of these PSU banks as well. So for example, something like a Bank of Baroda is again sitting at a fresh 52-week low. So that stock is just about hovering at close to around 110 rupees. Take a break, but before we do that, let's get in some opinion. Ashwini Agarwal, co-founder and partner of Ashmore Investment Management, to get his sense on a whole host of issues ranging from the outlook for the Nifty and some sectors. Let's listen into him and we'll be back.
The entire market is moving towards a risk-off mode. So even if you look at the broader index has two parts to it: the domestic companies, the well-managed banks, which includes the HDFC Bank, Kotak Mahindra Bank, etc., which continue to touch new highs or do really well. Within the Nifty itself, if you look at a Tata Motors, or if you look at ICICI, or if you look at other constituents, they've fallen quite significantly. So it's a tale of two cities almost, right? So forecasting what the Nifty does, will the Nifty break down, is an extremely difficult act, because the fact is that domestic mutual funds continue to receive money. That money has to go somewhere. If you are in a risk-off mode, there are some stocks you buy, and that's what's happening. How these trade restrictions or trade wars will play out. People have no idea what's coming next. And in Indian context, oil is obviously a party spoiler. So therefore, nobody is interested in taking any risk. So it's a very divergent kind of behavior. We've seen that in the past. We've seen that in 2013. We've seen that in early parts of 2008. This is a very classic knee-jerk rush for safety kind of reaction, which can continue.
Okay, I mean, this is looking as a pretty bad start to the week. I mean, you look at what's going on, 0.75% lower on the Nifty, that's 80-odd points. And I think we're at the day's low. Yes, we are. So, the swing from the high has been, what, a full 100 points. 10,736 was the high. We are at 10,632. I mean, this is actually now a full 100 points from the high and 80 points from Friday's close. The big markets, as we highlighted before, in the first segment with China and Japan and Asia, they're down. I looked at, US futures. The last I looked, there was about a 1/3% cut and not more. But things here are getting a little bit worse. I think, generally speaking, there has been this talking point that when will the Nifty start reflecting the pain in the broader market? The Nifty is, even after the correction, only about 5% away from the life highs, whereas the broader market is down quite a bit. I mean, the small cap index, even from the beginning of, over the last 10 days, actually, 11 days now, is already down 10%, more than 10%, whereas the Nifty is down some 2.5. So this general refrain that the Nifty is not showing the correct picture, and maybe it needs to start to catch up with the rest of the market on the way down. Let's focus on stocks in a bit, but use the opportunity now to talk about commodities and currencies. Oil, of course, should be top of mind. It's seen a relentless move, 6% last week. It's down on Monday today after Mr. Trump's tweets saying essentially that Saudi Arabia, according to him, has agreed for a 2 million barrel increase in oil production. But it's just showing up as a 1.33% cut in oil. Manisha is here with that and more from the commodity and currency space. Manisha, morning.
Thank you so much for that, Prashant. Well, absolutely. After that 6% gains in the previous week, we haven't seen any follow-through buying, and it all has been this busy weekend where we have seen a lot of words being exchanged between US and Saudi Arabia, and then, of course, some more OPEC members which do not agree to the stand that Saudi Arabia should be increasing output on its own single-handedly. Remember, we've just had an OPEC meeting, and a collective increase that has been agreed upon has been a 1 million barrels per day. So Saudi Arabia, while of course holds a spare capacity of 2 million barrels per day, but how much on their own, stepping out from the OPEC agreement, will they increase output is something that the markets would really want to watch out for. But having said that, even if the OPEC is looking at it, the markets have taken some cues from that. Another thing, of course, is that Iran says that even as there are sanctions on the Iran-owned, state-owned oil companies' exports, it is the private oil companies from Iran that perhaps could continue to export. So supplies from Iran are not expected to go down as much as the markets were thinking earlier. And that's yet another reason that you have seen prices decline because of that. Gnansekar now joins us to talk more about that. Gnansekar, hi. As I said, it's been a busy weekend when it comes to words being exchanged on crude. What is your sense? What are the cues you're taking? How is it looking on charts?
I think, if you look at all the news that's coming in, it looks more likely that I think Trump is quite determined to cut off the supplies from Iran as much as possible by the end of the year. So close to 2.5 million barrels of supply, as you rightly pointed out, I don't think the entire supply is going to be cut off, but that will only add to the existing tightness. So I guess the markets are not looking at the initial, hike in output from Saudi Arabia, and instead looking at the tightness ahead, which is the reason why you're not seeing much of a decline. And that's the reason why I think, it's still a buy on dips. It's headed towards $78, $80 in NYMEX. And we still feel, it's a buy on dips from present levels.
Okay. Also, how are you looking at the metal space? Because we've seen a decline continue in Asia today. The last month and the quarter hasn't been so good, especially for zinc, which is down 8%. Aluminum fell 7% in the last month. Copper is down 3.5% as well. We have opened all of these metals on a weaker note. Do you see further declines coming in?
I think further declines are inevitable, with the trade tensions, and at the end of the week, China is going to retaliate with sanctions. So we need to see what all is going to happen from news flows from there. But the one positive spot is that many of the commodities, and especially copper, I think is nearing cost of production, another $50, $75 from these levels. Which could potentially tighten the market once they decide not to, or to cut output from here. So besides that, I think the whole trade war tensions is going to keep the entire complex under pressure, and it's a sell on any upticks from here as of now. But copper alone, once it reaches certain important supports, I would be on the lookout to buy.
Fair point, Gnansekar. We'll let you go at that. So that really is the cue coming in for the commodities there. But clearly, it is going to be about the agro commodities, where the PM himself in the last week has said that the increase in MSP, the 1.5 times more than the cost of production, is going to be announced in this week. Now, remember, the announcement of MSP usually comes in by the month of June, early June actually. But this time around, we've seen the whole month go by. July has begun, and nearly half of sowing also has been done, and we haven't seen the MSP come through yet. The other thing, of course, is about the calculation of the MSP. A2, FL, C2, all of these terms are being discussed. Just to tell our viewers very quickly, A2 actually covers all the paid out expenses like the seeds, fertilizers, chemicals, hired labor, fuel, irrigation, etc. All of that comes under A2. FL actually means every paid out expense that we just talked about. And in addition to that, you have the unpaid family labor as well. C2, of course, is the third situation where everything that comes under A2 and FL will be taken into consideration. It also includes rentals. It also includes interest foregone on land and fixed investments, etc. So what we understand right now is that it's going to be 1.5 times of A2 plus FL is how the markets are looking at it.
I just want to ask you to repeat that again. There's too much. No, I mean, I'm just kidding. But yeah, it is the basic big question is how will cost of production be determined, right? I mean,
well, absolutely.
That is, because
yes,
you're saying 1.5 times, but you have to determine the base.
Yes, and the point also is that while of course we are looking at a higher MSP as compared to the last year, but how much higher? Because when you look at 1.5 times and when you take all of these calculations, some of the numbers really seem out of range at this point. But Siraj Hussain, who's ex-Agri Secchi, now joins us to make some sense out of that. Mr. Hussain, hi, welcome. What is your own calculation? Because when we look at stuff like paddy, maize, rice, etc., what is your sense? What can the markets really anticipate, expect when it comes to MSP?
We wrote a paper in April 2018. The title was Supporting Indian Farmers, Price Support or Direct Income Support. In that paper, we had estimated the likely MSP if the government takes into account A2 plus FL cost and shows a return of 50% over that. So according to our calculations, in case of several crops, the rise was expected to be very high. For example, the coarse grains like jowar, hybrid, jowar, maldandi, cotton, etc., ragi. You know, the MSPs are going to be so high and we are not very sure how that will impact the market. In today's Financial Express, Sunil Jain has written an editorial saying that it will, confirming what we have written in the paper, that it may have an adverse impact on India's export of cotton and textiles, etc. However, the real difficulty is not in declaring the MSP. The real challenge before the government would be how the farmers would get the MSP.
The implementation.
And lastly, you were discussing how the cost of calculation will be arrived at. Actually, the cost of calculation is done by the CACP on the basis of a scheme run by the Ministry of Agriculture, under which the data of cost of calculation of various crops is collected through the agriculture universities mostly. But this data is generally about 2 years old. So the CACP indexes this data to current year. So that is how the data of cost of calculation is calculated. There is a fear in many quarters that in case of urea, for example, the government may assume that the urea consumption has gone down due to new coating, and therefore the cost itself may be reduced a little bit. But that has to be seen.
Mr. Hussain, two-part question yet again. So, you have done your calculations as well as we spoke last time. So, what according to you is the percentage range that we are looking at when it comes to the MSP increase? And the other part, of course, is implementation, because MSP should have been announced some time back. But even if it does get now, even when there is procurement time in a few months, the implementation, of course, would become much more important than the MSP calculation in some time.
See, according to our calculations, the MSP of common paddy, which is generally grown in states like Madhya Pradesh, Maharashtra, Uttar Pradesh, Bihar, Jharkhand, West Bengal, the common grade of paddy, our estimate was that the MSP will rise by about 14%. In case of grade A paddy, which is grown in Andhra Pradesh, Punjab, Haryana, Western UP, etc., the MSP would go up by about 11%. In case of jowar, see, the MSP is recommended by CACP not only on the basis of cost of cultivation. This has to be understood. Also, the CACP takes into account the demand for a particular commodity in the market. You can't have price without any relationship to the demand. So the MSP for most of these coarse grains was generally not covering the cost of calculation, the cost of cultivation, and therefore the MSP of jowar, maize, even maize MSP is likely to rise by 15%, jowar by 44%, ragi by 54%, and sunflower by 34%, cotton medium staple, about which Sunil Jain has written today, 28%, Niger seed 52%. So these are unrealistic to some extent.
Mr. Hussain, just a quick point. So on the coarse grains, essentially because the government is also now pushing it in its midday meals, I mean, it's a demand function, demand response, these big increases that you're saying that we might see, because and paddy also average, what hike are we expecting? Because this government so far over the last 3 years, 4 years has been from market standpoint has got good marks to say, well, hikes have not been as high as it were during UPA 2 or UPA 1 for that matter. I mean, your thoughts there?
Actually, in case of paddy, the NDA government has given an increase of about 5 to 6%.
Yes.
Now the MSP for common paddy is likely to rise by 14% and grade A paddy by 11%. Now, in case of coarse grains, you mentioned, see, India has seen great success in case of maize, hybrid maize, whose seed is marketed by private companies. In Bihar, for example, where we had traveled about 2 months back, we have seen the productivity as high as 8 tons per hectare, which matches the productivity of corn in Iowa. Very high productivity, but the farmers are not getting MSP, and it is unlikely that government will be able to procure maize. In fact, Punjab has been demanding that if you want our farmers to diversify from paddy to maize, please procure, but the centre has not agreed, because the centre fears that, you know, it will be burdened with too much of maize stock, and what will it do with that? As far as midday meals are concerned, you know, there is this theory that you can distribute pulses and maize and coarse grains, but it is very difficult to do, and it is very much too expensive also to give everything under PDS. So I don't think government, you said government is pushing, I don't see government pushing coarse grains into midday meal yet.
All right, Mr. Hussain, thank you so much for joining us. You know, so as he was pointing out, declaring MSP is going to be one thing, but the percentage increase, implementation, whether it is going to be procured or not, I think it just opens a new era of problems from here on then.
And I think that's going to be very important from a CPI perspective, and hence what exactly the RBI does going forward. But nonetheless, just want to point out NTPC, just keep your eye out on that stock, because now it's just about close to its 52-week low, which it was sitting on in last week itself. So currently at around 152 rupees for that stock. 52-week low stands at around 149 rupees. Even similar case with something like an NHPC, which is very close to its 52-week low. So both these stocks should probably just be on your radar. Take a break. But up next, we're going to be discussing the technicals. Ashwini Gujral will be with us next to tell us what he is strategizing.